Hello, everyone, and welcome to this edition of Investing and Trading Live. As always, my name is Josh Lilquist, and each and every day, especially lately, we've been talking about the state of the market, what's been happening, the do's and the don'ts of the financial markets. But today, I tell you what, we got a special guest here today. I have former Wall Street investor Ed Ponsi on the show here today. Ed, how you doing today?
Great, Josh. Thanks for having me on the show. I appreciate it.
You know, I got a lot of guests on the show, and to be able to have a former Wall Street investor and current investor as well and trader, it is nice to get a lot of insight on the financial markets. And I kind of want to kick the show off with kind of how you got into the market. And, you know, you did a lot on Wall Street back during the dot-com bubble. I know we were having a conversation earlier about how crazy it was, but just real quickly explain about how you got started in the markets, you know, how the dot-com era, how the market was, the investing, how crazy it was, and we'll get into some other topics like the state of the economy, the markets as well. But how did you get started with everything?
Well, you know, I was a blue-collar worker. I had a blue-collar job, and but I was fascinated by the markets. I began to watch CNBC. Placed my first trade around 95, 96. Bought a stock, lost some money on it, and but I was fascinated. And eventually got a job as a financial advisor and made my way to Wall Street. And I got onto Wall Street right around the time that the bubble of 1999 was happening. So that was a wild time, a lot of fun, a lot of stories I could tell you, but a lot of experiences that have helped me to this day.
Yeah, what's pretty cool is it was probably a lot of chaos, which it kind of sounds like chaos here. We're in Colorado here today. I know we got a trading and investing event that we're doing here this week, but we're in a lobby here or something else, and it was chaos. Like there was yelling, screaming, and you were. What was some of the craziest things you've seen on Wall Street?
Well, I worked in an office. I was never on the trading floor. Our trading floor was in an office. I was never on the floor of the New York Stock Exchange or anything like that. But there was an amazing amount of broken equipment where I used to work. We actually had a room full of broken stuff because people were smashing monitors, smashing keyboards, everything. It's like when people would get frustrated. You know, I was never that guy, you know what I mean? I figured I could just take it easy. But man, some people were taking losses hard when they would lose. And when they would win, my goodness, people were buying tons of real estate. They were printing money because the market was going up so much. It was what we call a blow-off top. The shorts had surrendered. Nobody wants to sell. Only the buyers are left, and they're driving the market straight up. This is late 1999, early 2000. We didn't know it at the time, but it was all about to come to an end.
Yeah, well, you mentioned kind of an interesting comment there. Back then, they were printing money. Probably wasn't much compared to what they're doing now or what they did in the last few years. What is it? The last 2 years they printed, like, what's the percentage, or do you know?
I'm not sure about the exact percentage, but the M1 money supply vaulted from about 4 trillion to 20 trillion in the space of a couple of years, which was just unheard of. They're slowly removing that money, but they're basically cleaning up a puddle with a Q-tip. It's going to, at the rate they're going, it's going to take forever to pull that money back out. Now, when you put that much money out there, you're going to drive up stocks, you're going to drive up real estate, you're going to drive crypto, you're going to drive prices higher, and this is why we have inflation.
Yeah, so you mentioned they're pulling it out now, or trying to. Now, I know earlier we were kind of talking about the state of the economy, some of the things that are happening, and some of the opportunities that we might see moving forward, because you have all these talking heads out there talking about, oh, we're going to have a market crash, a recession, all this stuff. It's definitely possible, right? So what's your insight or your take on some of these, you know, pulling out the money? What could happen? But really, most importantly, how can retail investors have a strategy as an opportunity, not the end of the world?
That's a great point because, listen, we haven't had a market crash since 2008. We haven't had a major recession since the Great Recession that ended in 2009. And these things kind of go hand in hand. I would say we're overdue for a crash. We're overdue for a recession. And it's time to get prepared for that is now. If you wait, it'll be too late. You'll freeze. But on the other hand, you have to look at it this way. If there is a market crash, it is potentially the worst thing that could happen to an unprepared investor. But it could be an amazing opportunity for somebody who is a market professional, understands how to protect themselves. understands how to actually make money no matter whether the market goes up or down. And that's the type of thing we need to focus on.
Yeah, I like that. You mentioned, to be a market professional. A lot of people think that you have to be an actual Wall Street professional to do some of this, stuff that we're alluding to, the strategies and concepts. And it's not being that type of person. It's just knowing what the strategies that the big money is doing. So, because there's market strategies as it goes down. It's called shorting. So it's just another direction to have an opportunity with these markets. Now, let's just say, hypothetically, if we do see some turmoil in the markets, usually it's a bigger market that takes down the markets that are smaller than it. Like in 2008, it was the retail or the housing bubble, right?
Yes.
What do you think could be some possible catalysts if that does happen?
Okay, first of all, when I say professional investor, I mean anyone can learn to think like a professional and act like a professional. Just remember, I'm a poor kid from Philly, middle class, blue collar kid. I didn't come with a silver spoon in my mouth, okay? But I think if I can become a professional, perhaps other people can too. The other thing I wanted to say is, okay, let's talk about potential scenarios here now. The thing that has me most worried right now is commercial real estate. Right now, you have half-empty office buildings all across the U.S. You have half-empty malls. And it's not simply, we can't simply turn this into residential real estate. It's just not constructed that way. So I think what's going to happen is, just like we had a residential real estate problem in 2008, I see a commercial real estate issue rearing its ugly head late this year to early next year. Now, remember, these commercial real estate, they owe money to banks. So if they can't pay the loans, then the banks don't get paid. And we saw what happened in 2008 when the banking sector got into trouble. Basically, it was a contagion, and it took other companies down with it, and it spread all over the sector. Tech, everything went down. There's no way that you can tell me we're better prepared today. I know that we were too big to fail in 2008. Now, those same big banks are much bigger than they ever were. And so I could see it unraveling, starting with commercial real estate, perhaps late this year into early next year.
Yeah, I like that. The big thing in the markets is, and it's not necessarily knowing everything about the markets, it's finding somebody who does. You don't have to be the smartest person in the room, and that's why I love doing shows like this with people like yourself, with bringing some different knowledge, but being able to transfer that knowledge into the skills to be able to do it. That's another story, and that's what we talk a lot about, is how to do that, and putting the knowledge and the skill together to make smart investing decisions. But what do you think, in your opinion, is the biggest opportunity that we'll ever see? When this market goes down, or being able to buy when it's cheap again?
You know what? That's a great question, because I think a potential market crash, if you look at it as a professional, and when I say professional, how do you become a professional investor or have the attitude of the professional investor? Get trained. You got to get trained to develop the skill. I do think a crash could be the biggest opportunity of the next 10 or 15 years. Think about that. Think about The Big Short, right? Michael Burry, The Big Short, making $400 million or more as the market is crashing in 2008. And there are many other examples I can give you. Jim Chanos shorting Enron 20 years ago, making $500 million. That's a massive, massive opportunity. But it is a double-edged opportunity, as you pointed out. So let's say we can profit on the way down. Now, all these great stocks are now at a reasonable price for the first time in I don't know how long. And if you can actually turn a profit on the way down, now you've got enough money to buy them. Contrast that line of thought with what's going to happen to the average retail investor. They are going to hold their long positions all the way down. They're going to buy mutual funds, and when those mutual funds start to go down, they're going to call their investment advisor, and the investment advisor is going to tell them, what he's going to say,
keep it for the long haul.
Keep it, go ahead, it's okay.
Or buy more.
Right, and then ride that to the bottom of the ocean like the Titanic, right?
Yeah.
It's not a good strategy, and I'll guarantee you Goldman Sachs is not going to hold it down because, it'll come back eventually. That is not a professional style strategy. Professional thinks in terms of, listen, if the market goes up, great, let's make money. If the market goes down, that might be even better if you're prepared, if you've developed the skill, and if you've been trained.
I like that. And just being able to get started, and that's where most people have the issue, is where do they start? How do they get started? And you've helped, thousands of people get started. And it's just having the right techniques, the right strategies, applying them with proper risk management. I like to call it capital management because it doesn't sound so scary for those people, right? People are afraid of risk. But you know what? One of the good things, and I know you talk about this a lot, sometimes you got to jump. Sometimes you have to take that jump to learn how to do that. So I appreciate you coming on the show here today. I know we could do this I could do this for hours.
I know. Isn't this a blast? We should do this more often.
I know you're hungry. We could do this for hours, but appreciate you coming on the show. And as always, we talk a lot about risk management, protecting your positions. So when you have profits, take your profits when you're there. When you have losses, cut them short, move away, walk away from them, move on to the next opportunity. Until next time, retire young, my friends.